Success is nothing more than a few simple decisions practiced every day, while failure simply is a few errors in judgment repeated every day. Now, if you think about it, it's the cumulative weight of our disciplines and our judgments that leads us to either fortune or failure. So, how can you become more successful in life? How can you become more successful in your investing or your business, your profession? How can you have a lower chance of failure? Well, one of the best ways I know is to study successful people, and even better, to study failures, and then have mentors by your side to help you do the right thing. In today's episode of the Michael Yardney podcast, Mark Creedon, founder of Business Accelerator Mastermind, and one of my coaches and mentors, and we're going to share with you a list of things that we believe you need to understand about investing, about the economy, and about business. Now, this is really a follow-on from our last chat. We had that a couple of weeks ago, where we discussed 24 things that we felt you should know that were based on the musings of Morgan Housel, one of my favourite finance writers. Now, judging by the number of downloads of that podcast, it was very, very popular. So I'm sure you're going to gain insights from my chat with Mark today, whether you're a beginning investor or an experienced investor, or whether you're in business. So welcome to today's show.
Welcome to the Michael Yardney podcast, where twice each week you will learn a number of new ideas regarding success, property investment, and money in around 30 minutes. Our show is brought to you by Metropole, who specialise in helping you grow, protect, and pass on your wealth through strategic property and wealth advice. Now, here's your host, Michael Yardney, Australia's authority in wealth creation through property, who has been voted one of Australia's top 50 most influential thought leaders.
A number of years ago, I started making a list of all the things one needed to know about investing. I wanted to capture some quotes, my favourite quotes, the lessons I'd learned. It ended up being a much more ambitious project than I envisaged, and it remains an ongoing one. One of my favourite columnists over the years, whose articles I regularly read and I keep track of, is Morgan Housel. He writes a lot about behavioural finance and why supposedly rational people act irrationally when it comes to money, to finance and to business. He writes for the Collaborative Fund nowadays. Now, a number of years ago, he wrote a great column which detailed 122 things everyone should know about investing in the economy. And there were some great lessons to take away from that article. And as I said in the introduction, a few weeks ago, Mark Creedon, founder of Business Accelerator Mastermind, and I shared 24 of that list of 122 things. Now, if you haven't listened to that show, you really should go back after listening to this one. Keep listening, but afterwards, go back and listen to that. But today, with Mark Creedon, I want to pull out another 12 of Morgan Housel's great concepts to discuss. Hi, Mark.
Hello, Michael.
Now, last episode that we did together was very popular and lots of downloads. So I thought it's worth discussing some of these concepts again. So I'm going to read out some of the concepts, the thoughts, the ideas that Morgan Housel had come up with. And then let's both talk about it, how it relates to business, to success, to investing, I guess to life as well. And the first one was investment banker Dresner Kleinwort looked at analysts' predictions of interest rates and he compared them to what interest rates actually did in hindsight. And he found an almost perfect lag. He said analysts are terribly good at telling us what just happened, but of little use in telling us what's going to happen in the future. That's actually not unusual in all areas of our life, is it? It's common to confuse the rear vision mirror with the windshield.
Yeah, it is. And Michael, one of the things I often say is that the windscreen is actually bigger than the rear view mirror for very good reason.
So I think we just got to look at all those predictions made last year. Now, of course, at the beginning of COVID, it was difficult to make predictions about where we would be. We were in uncharted territory. But look at those predictions about property, about unemployment, about the economy. They were all wrong. And interestingly, it's much the same this year. So it's nothing new. I guess one of the lessons I'd be suggesting is that don't make 30-year decisions about investing, about your life, about business on the last 30 minutes of news.
Yeah, and it shows, Michael, doesn't it, the advantage of real-world advice as opposed to, with all due respect to analysts who often sort of sit in rooms and go through data and statistics and may not necessarily have a real connection with what's actually happening out in the marketplace.
You're right, because all the data, all the statistics leave out one big thing, and that's the human element of fear and greed and FOMO driving the markets at the moment. I think the other thing is there's a confusion by a lot of people about what are leading indicators, what's showing what's going to happen in the future, and lagging indicators, things that have happened in the past. Most of what the media reports are what we call lagging indicators. What happened to inflation last month? What happened to unemployment figures a month or two ago, things that have happened in the past, sales that have occurred, what's happened to prices. Mark, when I changed my way of investing and doing the research to look, as you said, through the front windscreen and not the rear vision mirror, I improved my investment success and those of our clients. So we look at leading indicators, what's going to happen in the future, things like economic growth, what's going to lead to wages growth in a particular location, what may lead to population growth, which over time will increase property values. So look for trends that are moving forward rather than short-term fads.
Yeah, 100%. And Michael, we see the same in business too, where often advice comes for business owners about what's happened in the past. It's really important, obviously. We get it. And you and I both get our financial reports, but we don't rely on past performance as being the sole indicator of what we should be doing in the future.
Hey, you'd be a good financial planner. They say that all the time, don't they?
They do. They very much do.
The next quote from Morgan Housel was, study successful investors and you'll notice a common denominator. They're masters of psychology. They can't control the market, but they've got complete control of the grey matter between their ears.
Yeah, we often say, Michael, let's say business, that life really is a game of inches, and the most important inches are the ones between your left ear and your right ear. And I was just having that conversation with somebody the other day. In fact, in likening business to sport, we talk about how most things in life are really about the psychology. I mean, what's the saying, Michael? Finance would be better if it was taught by the psychology and history departments at universities.
That's true, because rational people, they don't act rationally when it comes to money or investing. And I think also in your area, about business, either emotions get in the way, don't they?
Yeah, they do. And I guess the thing, Michael, we see that sort of, we think that money's going to bring out our calculating side. It's going to inspire decisions that are motivated by rationality and objectivity and self-interest. But in fact, the evidence suggests that money does exactly the opposite. It leads to almost like a drug-like mental state of irrational choices that are anything in fact but sound, aren't they?
True. And the other factor that I see with wealth creation in general is that most people, and we all actually have our own wealth thermostat, the level of wealth we feel comfortable at. And you've heard the story, Mark, of people who win the lottery and then a few years later they've lost it all. I believe if you took all the money in the world and distributed it equally, it'd be back in the same proportions again. And that's because we have a particular level of wealth, a thermostat that we're comfortable with. And once we exceed that, you actually tend to sabotage yourself. That's one of the things we do at Wealth Retreat, of course, helping people upgrade their wealth thermostat. I think that's one of the things a good coach will do. They see your blind spots.
Yeah, 100%. Well, Michael, luckily you and I have never sabotaged ourselves in our journeys to get where we are. But you're 100% right. People do engage in that sabotage. I guess it just goes to show, Michael, success is really it's nothing more than a few simple disciplines practiced every day. While failure, in fact, is really a few errors in judgment repeated every day. It's a really interesting. It's the accumulative weight of our disciplines and our judgments that actually lead us down one path or the other.
And these are habits. Most of what you do in this world, unconsciously, subconsciously, and that's why Tom Corley in my book, Rich Habits, Poor Habits, is helpful in A, making people recognize them, and B, replacing bad habits with good habits. Now, you can actually have short-term habits. You can actually work really hard just to study for an exam or to get fit because you're going to do a marathon or lose weight because your kids are getting married. But really, it's hard to keep those habits in the long term. And that's where I think your own internal thermostat and your habits that have now so ingrained rule your life.
Yeah, and as you said before, that's the great value of having a mentor, someone who can actually see your blind spots, can see where those habits might be, taking you astray. And in fact, Michael, just before we started this conversation, you and I had a little mentoring conversation between us.
Yes, we did. And you, as my mentor helped me and made me see where I actually wasn't thinking rationally about something. It wasn't about business, but thank you very much. I think one of the lessons along these lines was a quote from Bill Gates, who said, "Success is a lousy teacher. It seduces smart people into thinking they can't lose, which means that they make silly decisions."
Gosh, and we've seen a few of those over the years too, haven't we? People that we've known and people we've tried to help along the way.
Sure. And I guess the answer is, despite having the mentors and the training, you can't help everybody. Now, another lesson in Morgan Houssel's great article was try to learn as many investing mistakes as possible, but vicariously do it through other people. Other people have made every mistake in the book. You can learn from studying the investment failures. You can actually learn more from them than you can from studying the investing greats.
You can. I was just thinking the other day, Michael, it's a bit of a pity, isn't it, that failures don't write books or run webinars or seminars. I mean, imagine a book, how to gain weight, how not to lose weight, how to be horribly unfit. It'd probably be a very good book to read.
It would, but it wouldn't sell on the bookshelves, would it, unfortunately? So experience is far more important than knowledge. I think that's the other thing. You can actually gain knowledge from the internet, but you can fast track the knowledge by having experience. There's no shortcut to experience or perspective. Well, that's actually not totally true, because you don't have to use your own experience. You don't have to have your own perspective. So I guess maybe the shortcut is getting a mentor on your side, whether it's a property mentor, a wealth advisor, or a business advisor.
Yeah, 100%. Michael, I think the question is, do you want to make your own mistakes and pay the price for that? Or do you want to pay someone that's already learned how to avoid those mistakes? Seeking advice from someone with more experience than you. And the reality is it's often the lowest cost and the most successful approach, rather than making the mistakes yourself.
Sure. So you can minimize your failures by having good mentors and good coaches. And look, we eat our own cooking, even though you're business coach to a lot of very, very successful investors, entrepreneurs, business people. I know you have your own coach who teaches you how to be a better coach. And similarly, you coach me, but I also have coaches in other areas of life as well. I guess that's one of the secrets of my success. I've had people who've helped me along the way.
Yeah, 100%. And there's great value in doing that. Mike, I read this great little story just the other day about a father who every day used to ask his kids at the end of the day, not what was the best part of your day or what was the success you had today, but what was something you failed at today?
Interesting.
And he was trying to instill in them the fact that failure is perfectly okay as long as you learn from it. So the first question was, what do you think you failed at today? And what did you learn from the process? So it was just a fascinating little twist on something that we do. Let's talk about failures, though, and mistakes that people make. In terms of property investment, Michael, what do you think are the 3 or 4 big mistakes that people make?
Well, I think one of the big ones is not having a plan, not having a structure, because if you don't have a plan, when things go wrong, you tend to default to what everyone else is doing or what you're reading or what you're listening to. And if you're doing what everyone else is doing, you're going to end up with all sorts of trouble. So either not having a plan or following the wrong financial plan. Look, everyone actually has a plan. You actually may not realize it. You all got mentors too. It depends who you're listening to. It could be the guys in the pub, or it could be the people on this podcast. I think a lot of Australians have the wrong plan. And actually, if anything else, just leads them to mediocrity. They've been taught by their parents, get a good education and then you get a good job and then work for 40 years and save along as you go and then buy a house and pay it off. And if you've got any money left over, then invest it. And they hope it's all going to work. But hope isn't a strategy. It's not a plan, Mark.
No, it absolutely isn't a plan. What are the other big ones, Michael?
I think blindly turning over your investments to a professional. Now, you know that our business is actually helping people with their investments. We don't sell property, but we give advice. We strategize. We put a plan together. We use our buyer's agent services to help. We use our wealth advisory or financial planning business to help them get their money and financial structures all organized. And you, through Business Accelerator Mastermind, help those business people and professionals. I'm not saying don't ask for advice. I'm saying be careful who you're asking advice from, because people are turning over their investments to what they think are professionals is a whole new breed of buyer's agents who've done a 3-day course but haven't got the perspective. They're handing their financial property investments to a property marketer who sells them something off the plan, or a new house and land package that's not working. So I think that's one of the other big mistakes I see people make. And I think the average investor, they're actually focusing on saving rather than investing. And if the pandemic has taught us anything over the last couple of years, it is that you can't rely on your job. You can't rely on one stream of income. And those people who had saved and then invested and had some security through having good investment grade properties, or having shares in the big companies of the world, they in general did much better.
We've seen so many people coming into the property investment market, Michael, in the 10 years or so I've been working with you, and I'm sure you've seen a lot more over your time as well. But it gets back to what we spoke about at the very early piece, wasn't it, about theorists as opposed to realists, people who are actually out there doing it. And there's so many theorists that you can get advice from. So it's not, as you say, it's not about not seeking advice. It's just being very picky and choosy and careful about who you actually speak to and where you get that advice from.
Well, some people don't like paying for advice, Mark, whether it's in property or business coaching. And interestingly, the most expensive advice is the free advice you get on the internet, which is wrong.
Yeah.
So
very true.
I've shared some of the many investment mistakes I see people make. What about business mistakes? What sort of mistakes do you see business people making?
Well, probably not surprisingly, they're not vastly different, Michael. I mean, one of the big mistakes I see business people making is not having a plan, or alternatively having a plan which is so obtuse or so complicated. I mean, the number of times I've gone into a business and asked if they have a plan, and they've pulled this big D-ring binder off the shelf and blown the dust off the top of it because they've paid somebody to come in and write a plan for them that's not practical at all. And as a matter of interest, Michael, our business plan in our mastermind program, for example, is one page. In one page, we can create a plan that will take you through to the next 12 months to 3 years.
At least it's doable. You don't get scared off by that, do you?
No, you don't. It breaks it down into chunks. It's pretty simple and straightforward. So I think failing to have a clear plan, and you know this, Michael, the number of people that I've sat with and asked them, what do you want out of your business? And the answer is more money or success or more time off, without being really clear about exactly what it is that they want to achieve. So number one is not having a plan. I think,
actually, if I could interrupt, I think that's another important reason for property investors. You actually have to have a why. There has to be a reason behind why you have the delayed gratification, why you actually take the risks that are involved there and go to the expense of investing. If you don't have a strong enough why, it's too easy to give up along the way.
It is, Michael. It's the first question that I ask actually in my book is you have to understand your why in business. If you don't understand the why, then what motivates you to get up every day, to get involved in the business, to face some of the hurdles and some of the high jumps head on. So having a plan, which very much includes your why, is number one. I think the other thing that I see quite a lot of is people just don't value their time. They don't realize the highest and best use of their time. So they're terrible delegators. They don't understand how to delegate. They fail to realize what is the highest and best use of their time. And so you find people doing things in their business that really they shouldn't be doing. They're doing what I call, the $15 jobs when they should be doing the $1,500 jobs. And we see that particularly, Michael, with professionals in private practice. And you and I know a few of those.
Oh, yes, definitely. So what's the biggest way that Business Accelerator Mastermind and you as a business coach helps Australian, and actually I know it's not just Australian, but you've got businesses from around Southeast Asia?
I think the big thing is to help people to realize that what we need to do is help them to build a business and not just a job. So it is about understanding the highest and best use of their time, getting the right people around them, and setting very clear targets that are closely aligned to both the time that they're spending, the team that they have around them, and moving forward to achieve those targets. So it is about understanding that it's about having a business and not just a job. And Michael, a lot of
it's not a play on words, is it?
No, it's not. It's not. A lot of the business people we speak to, they say, I've got this great business. I go, great, awesome. Can you go away for 6 weeks and the business will run without you? Will there be as much money in the bank when you come back as when you left? And invariably the answer is no. In which case, what you've got is a really good job. It's not really a business at all.
Sure. And unfortunately, COVID showed that as well. Having a business, not a job, in a level 3 businesses, I know you coach people to, gives them a different level of clients, a different value in their business, and actually different type of people working in the business. It is a process. It's an ongoing event, and I'm really proud to be part of it as well. So if you want to understand a bit about what Mark does, go to metropolmastermind.com.au, and you could end up having the same business coach. No, you should end up having the same business coach as I have. Back to Morgan Housel's comments, investor Dean Williams once wrote, confidence in a forecast rises with the amount of information that goes into it, but the accuracy of the forecast stays the same. That's really interesting, isn't it, Mark? You don't know what you don't know, so you easily get sucked in if you have all this homework and all this research that's there.
Yeah, Michael, it's interesting how these are sort of all linked to each other. We talk about being careful about where you get advice from and who you listen to and people who are looking through the windscreen, not in the rearview mirror, because, there's a whole swag of gurus, property gurus, business gurus, telling people where to invest, but they've really got no perspective. Lots of info, but no real depth, isn't there?
Well, as we've often said, there's 25 million property experts around Australia. Everyone's got an opinion. Look at all those bank economists who at the beginning of last year and even early this year said that the property markets were going to falter and fail. Just look how wrong they were. I guess the accurate forecasts and all the details won't help you. So I guess that's one of the things you've got to learn. Property predictions are difficult to make because you can study all the fundamentals, but every year there's an X factor. Sometimes it's a major one, like a negative one, like the coronavirus. A couple of years beforehand was the unwinnable election that Scott Morrison won, which some people would say was an upside factor rather than a downside factor. But you've always got to remember that you've got to have your eventualities covered. Plan for the best, but prepare for the worst, and resist the temptation to cut corners. What you've got to do is do your own homework and research, and probably also should be listening to people with different opinions to you, Mark. Otherwise, you get confirmation bias.
Yeah, you do get confirmation bias. And the other thing I see, Michael, too, is people you've got to resist the temptation to cut corners. So, there's always another investment. I mean, you can invest in Tesla or Afterpay or Bitcoin, and
Bitcoin. That's it. That's what I want to do.
You can make a quick return, can't you? But it's about having that successful methodology. And the reality is, as much as we'd like to think we're all very, very clever, the likelihood of actually finding the next unicorn is really very low, isn't it?
It is. So do something that's always worked rather than something that's just working now. Another interesting quote was that none of the Forbes 400 rich listers in America, we'd probably say the same for the Australian Financial Review rich list here too, none of them can be described as a perma bear. Now, a natural sense of optimism isn't only healthy, it is vital. But interestingly, Mark, I think nature has made most of us pessimists. We actually look for harm. We try and watch out for that bear that may be, or saber-toothed tiger that may be jumping out of the bush, rather than thinking it's the wind that's rustling it.
Well, I think that's right. And of course, you're talking about the concept of evolution over time and how we, as human beings, that's when we were back in the cave days. We didn't really know if it was a saber-toothed tiger or just the wind rustling in the bush. But the reality is, Michael, that, over time, I mean, the media feed that. If you watch the news, it's negative news sells, and it's their job to sell their advertising spots either side of the news. It's not to actually to boost your confidence. So it doesn't mean that you have to be shiny and happy all the time. You don't have to have beaming every moment of the day. But I think it does mean you need to have this ability to look at a situation and look around the corner and see possibility versus difficulty. And I think that's what an optimist does as opposed to a pessimist.
That's interesting. So It's much more than positive thinking. It's not just waking up in the morning and doing mantras and doing yoga. And that's just as relevant in business with all the stumbles and hurdles that are going to come along the way, because success isn't easy. If it was, everyone would have it, whether it's in investing or in business.
Yeah. So do you mean you don't get up every morning and do yoga, Michael?
No, but I actually do think positively, and I actually do practice gratefulness, because I think unless you are grateful for what you've got, you'll never really be truly happy.
No, and you and I were having a conversation about this just the other day, about being grateful for where we live and the country we live in, the economy we live in. But I know that there are times when I'm sort of having a bit of a negative approach to things. Sometimes I'll just ring you and say, hey, can you just check me on this, please?
Yeah.
I've just got this approach which I think is probably not the right way, and you just pop in this positivity, and I think it just shows you, Michael, optimistic people, they're more likely to act, they're more likely to put into effort into achieving what it is they want to get done, they're more likely to invest, and I suppose then that sort of that high optimism tends to predict high levels of both effort and success, doesn't it?
Yes, it does. Another interesting quote, and something I think successful investors would recognize, is how long you stay invested for will actually be more important. In fact, probably the most single important factor determining your success. In other words, if you own the right assets and allow compounding leverage and time to work, you'll actually grow wealth in property, in shares, and even your time in growing your business. That means you don't have to get your timing perfect. You don't have to get the timing right. And you definitely don't have to buy a bargain. That once-off bonus you may get by buying a property $25,000 cheaper isn't going to work. It's not going to be helpful if that property doesn't grow at investment rate, wealth-producing rates of return. And don't expect to get wealth-producing rates of return from a secondary asset. So it's really the compounding effect, the power of compounding. But actually, not just in investments, it's also in decisions, because the sum total of all the choices that you've made in the past are creating where you are right now. You're the result of all those choices you've made, the decisions you've chosen to make, but also, I guess, the decisions you've chosen not to make.
Yeah, and we often talk about how time, in the market as opposed to timing of the market. And the same thing in business. I mean, nothing beats experience. And so the decisions that you make in your business right now will be the decisions that it's like reap and sow, isn't it? The decisions you make now, they're the seeds you sow, and you'll reap the rewards of those in 12 months, 3 years, 5 years' time.
Now, interestingly, Stuart Weems, who's a regular on this podcast and an accountant, financial planner, and runs a very successful investment advisory business, he in a recent blog said that one good financial decision will have positive consequences. But if you can actually make 5 good decisions in a row, they'll be life-changing. It'll create much more than the 5 times positive income or a compounding effect of your decisions. It's really the compounding effect, isn't it?
Yeah, absolutely it is. And in terms of just not just that one decision, but the constant decisions. And I guess, Michael, when it comes to building wealth and fulfilling lifestyle, I mean, you talk about that true success comes from being across a number of facets in investing, isn't it?
Sure. Well, Stuart basically says you've got to have cash flow management. So it's not just buying an investment. You've actually got to be able to hold on to it in the long term. You've got to actually have a strategy, is what Stuart said. And that's 100% true. But we started off saying that right at the beginning, the first point today. You've got to own the right assets using the right methodologies. In other words, don't expect wealth-producing rates of return from secondary assets. Stuart suggests you optimize your superannuation. And again, we're not financial planners, so we're not allowed to give advice on that. He suggests minimizing your tax, and we recently did a podcast with him on that, and also protecting your assets for your family's benefit. So a smart investor, a strategic investor, doesn't just buy property. Property is a small part of the process. The process starts long before you buy a property, by getting a plan, by getting your finance in place, by getting the right ownership structures, by understanding why you're doing this, and having cash flow buffers to see you through the ups and downs.
And interesting, Michael, Stuart could very well have been writing about business, couldn't he? Because, I mean, the facets are the same, a good cash flow management, good plan, a clear strategy, investing in the right assets, having the right people around you, getting the right advice, and protecting your assets in the long run. So that advice applies to property investment, applies to business, really it applies to life, doesn't it?
It does.
And I guess the next thing we can think about, since we're talking about you doing yoga every morning, is that we can apply it to health as well, because a good level of health requires us to focus on optimizing our diet, exercising regularly, getting good quality sleep. And the thing is that you can't achieve that full potential of our health just by focusing on one of those. We get great sleep, but we've got a poor diet, we don't exercise. So, I think optimizing your finances, optimizing your business, it's exactly the same. It is an holistic approach that yields the best results, isn't it, Michael?
Definitely. Now, Mark, there were a whole lot of these topics we were going to discuss today, but I'm only going to bring up one more today, and I think we're going to have another session on this, because we try to make these podcasts about half an hour so people can listen to them in bite-sized chunks. But the last one I'd like to just run past you is, when you think you've got a great idea, go out of your way to talk to somebody who will disagree with you. At worst, you continue to disagree with them, but more often you're going to gain valuable perspective. And again, that fights confirmation bias, Mark.
It does. Michael, it's one of the things I hate about talking to you sometimes, because I know I've come to you with this, Michael, I've got this great idea, and you'll just shoot it down in flames. And I know you're doing that out of care and respect, but sometimes you actually need to hear that. And I say I hate it because it's things I don't want to hear, but I know it's things I need to hear. So having somebody who's prepared to actually be brutally honest with you and help you to fight that confirmation bias, I think is just so vitally important in life. And that's why I continue to float ideas past you.
Now, again, that works in life, it works in business, but it also works in investment, because you read something on the internet, or you listen to a podcast or a webinar, and they say, go chase this hotspot, go to this new idea, or invest in Bitcoin, or whatever the latest fad is, because there's a whole lot of new people at the moment. With the market booming, this always happens, Mark. A whole lot of new gurus come out, and they've got to come up with something different. Otherwise, they're the same as all those established people. So how do they find a niche? They come up with something that often isn't tested, often isn't proven. Now, they're not all charlatans. I think many of them are well-intentioned, enthusiastic amateurs. So therefore, you really do have to speak to somebody with a level of perspective to just bring you back to earth.
Yeah, because it might be the case that when you have that conversation, as you and I have had, and sometimes I've come up with an idea and you've shot it down in flames, but it's forced me to mount a very strong argument as to why it is a good idea, and you've come around. So it's not about getting somebody to shoot down your ideas. It's about just getting that person to bounce those concepts around with, so you can get advice not just from yourself.
Well, I enjoyed this chat, but I always do. I mean, we speak 3 times, 4 times a day anyway, but doing it formally like this and just bouncing these ideas off, and I hope the listeners have enjoyed it as well. So if you are keen to have somebody on your side to bounce ideas off, why not get one of the property strategists at Metropole to help you formulate a strategic property plan? Go to metropole.com.au. But if you're a business person, if you're an entrepreneur, why not have the same business coach as I have, Mark Creedon? So, Mark, just tell us a little bit about what Business Accelerator Mastermind does, how your program helps people differently to others.
I think, Michael, where we are quite different to others is that we work both lots of one-on-one time. So we map out game plans for our clients one-on-one with me. And then we have group sessions as well, because we know there's great power in collective momentum and shared wisdom. And the other thing I really love about our program is that not only do we map out game plans to help people to achieve their goals and then constantly reinforce it, we give them constant support, but they have access not just to you, not just to me, but also to the rest of the people in the group. And it's what we call our tribe. And there's just massive support. And, the reality is there's some very, very clever, very successful people in there who are very happy to share the lessons that they've had, all the things we've been talking about today, in fact.
Well, there'll be a link in the show notes, but if you want to have a chat with Mark and see if he can help you, Mark's happy to have a one-on-one chat, aren't you? I've just dobbed you in, Mark. Go to metropolemastermind.com. Does one still use the word dobbed? Go to metropolemastermind.com.au. I'll leave a link in the show notes. And since we didn't get through all this list of investment quotes I wanted to discuss, we're going to have to come back again real soon and do it again, Mark. Thank you.
Looking forward to that, Michael. It's good fun.
Now here's Michael's mindset message. Remember, a change in your thinking will lead to a change in your life.
In my mindset message today, I'd like to share with you a provocative quote by the late actor and humanitarian Hugh O'Brien. And when I read it, I actually had to look at it twice because he said, people are not created equal. He said, I don't believe all people are born equal. He said, created equal in the eyes of God, yes, but physical and emotional differences, parental guidelines, varying environment, being in the right place at the right time, all these play a role in enhancing or limiting an individual's development. And he's right. He went on to say, but I do believe every man and woman, if given the opportunity and encouragement to recognise their potential, regardless of their background, has got the freedom to choose in our world. Will an individual be a taker or a giver in life? Will that person be satisfied merely to exist or seek a meaningful purpose? Will he or she dare to dream the impossible dream? And he finished off by saying, I believe every person is created as the steward of his or her own destiny with great power for a specific purpose, to share with others through service a reverence for life in the spirit of love. Well, interesting thoughts. So, no, we're not all born equal, but if you're listening to this in Australia or one of the other great countries that a lot of people listen to this podcast in, you've already won the lottery in life. You've won the lottery by being born at this time. Now, I know there are a lot of challenges going on in the world and probably in your life personally, but you have the opportunity, as Hugh O'Brien said, to decide your destiny. You're the steward of your future. So be the pilot of your life. Don't be a passenger just going on a ride. I hope you enjoyed my chat with Mark today, and if you did, and you know somebody else who would benefit from this information, whether they're a property investor or a business person, please tell them about the Michael Yardney podcast. Just tell one person and help me in my quest to make more of us financially free, financially successful. Of course, you can always tell the world by leaving a review, and if you do, and I read it out, as I'm about to for Debbie Watson-Smith, if I do, then just email me, michael@metropole.com.au, and I'd love to gift you one of my books. Now, Debbie wrote inspiring and motivation information. I'm a regular listener to Michael's podcast and love the information he shares. To anyone interested in property and educating yourself, these are must listens. To everyone interested in improving your life, as Michael quotes often, a change in your thinking will lead to a change in your life. Well, thank you for those kind words, Debbie. I'll be back again real soon, but you can catch me in between. Just look for me on social media, look for Michael Yardney, or join my private Facebook group. Go to Facebook and look for the Property Update Facebook group. I'll be back real soon. In the meantime, have a great week. Make it a great week.
Thanks for listening to this episode of the Michael Yardney podcast, which was brought to you by Metropole, who help their clients grow, protect, and pass on their wealth through strategic property and wealth advice. If you like what you heard and don't already subscribe, you'll find us on iTunes or on your favourite Android app as the Michael Yardney podcast. Watch out for our next show, which comes to you twice a week, and you'll learn some new ideas about property investment, success, and money in around 30 minutes. To get more of Michael's thoughts, go across to www.propertyupdate.com.au and sign up for his daily morning briefing, and you'll hear from not only Michael but a group of leading property success and money experts. And just a reminder that the information you heard in this show today is general educational advice and not specific investment advice, as we don't know your personal circumstances. If you're looking for specific advice, why not ask the team at Metropole to help you?